Credit is often one of the most important components when it comes to buying a home and getting pre-approved for a home loan. You may be curious about ways you can build your credit to improve your credit score, or even how to establish credit if you don't have a credit score. In today's video, I'll be sharing a few ways you can build your credit to buy a house. Be sure to watch until the end to hear my #1 credit building tip. Do you need credit to buy a house? Well, the answer is, if you're not using a home loan and you're paying cash, then credit won't matter. But if you do need to use a home loan to purchase a home, then the credit score can impact your ability to get qualified. So please understand that there are some programs out there for people that do not have a credit score. That doesn't mean not having a credit score because of bad or derogatory past credit, or maybe not having current credit. That means for somebody that truly has no credit profile at all, there are some programs out there that you could potentially qualify for. However, the guidelines around those programs are much stricter. And so they could potentially require more down payment. They could restrict the type of occupancy, meaning primary residence, second home, maybe potentially no investment properties. It's really going to come down to the lender and their approach on what to do with a loan application that has no credit score at all, i.e. meaning no credit profile. There are programs. I don't want you to think that there's not. It's just that they're limited and they're not as mainstream. Okay, so let's get into it. Now, how do you get credit if you don't have any credit? Well, the easiest way to actually get on the map with a credit score is to obtain a credit card. Now, I am not advocating credit card debt, but what I am advocating is using a credit card and the strategy behind it to be able to actually get a credit score. So here's how it works. Let's say that you apply for a credit card and that you have a $500 credit limit that the credit card company gives you. First and foremost, do not max that thing out. Do not spend more than 20% of the limit. So in a $500 scenario, you're not going to spend more than $100. So you're going to spend $100, go to dinner, go to Starbucks. You can spend $20. It doesn't matter. What they're looking for is activity on that trade line, on that credit account. After 4 to 6 months of having that credit card, then you will start to see a credit score pop up on your credit profile. That's how it works. Now, what if you can't get a traditional credit card for whatever reason? There is an option that's called a secured credit card. And in that scenario, you're going to go to your local bank and ask for a secured credit card. What they're going to want is, if you're not meeting whatever their guidelines are to give you a credit card without securing the limit, then you can give them the dollar amount. Let's say it's $500. You give the bank $500. They hold that for a period of time. Generally, it's about a year. And then they give you a credit card with a $500 limit. So that's called a secured credit card. And so what the bank is doing is securing your money in case of default. And sometimes with new credit profiles or people that don't have established credit, or maybe younger people that are just starting out, sometimes banks will want to do that. It doesn't matter, other than once you have that secured credit card, it works the same way. So if it's a $500 limit, you're going to, let's say, go grab a coffee and pay it off. You want activity on it, but do not spend more than 20% of the limit. That's going to help you maximize your credit score. And again, it doesn't matter if you've applied and they've given you a credit card, or you have to go the secured credit card route. After 4 to 6 months, you will start to see a credit score pop up on your credit profile. From a home loan perspective, why do home lenders really care about a credit score? Well, what they're looking at, and remember, credit score is just one piece of the entire loan decision-making process, but it's a very important piece because credit score generally will predict the default rate on a home loan, which essentially means that the higher the credit score, the lower the default rate, which a lender likes, right? They like to have a secured investment if they're giving you money. That's really what it comes down to. Take a peek at this chart. I mean, it is pretty incredible just to look at these numbers, but this tells you, and I think really helps us understand why lenders are so focused, why home loan lenders are so focused on credit score. So why increase your credit score? Because depending on the home loan program, a higher credit score could impact your interest rate, the cost of the loan, and potentially mortgage insurance if you're taking out a conventional loan with less than 20% down and have mortgage insurance. So credit score is pivotal to the terms of your home loan in some cases. I'm often asked, what is the difference between a soft credit pull and a hard credit pull? Well, the difference is, on a soft credit pull, it's not going to be a true hard inquiry on your credit profile, which means it's not going to impact your credit score. On a hard credit pull, it is going to show as an inquiry on your credit profile. Now, if you're really serious about going through the home loan process, getting a hard credit pull is key, because then the lender can see actually all of the credit scores and be able to set you up for success. The soft credit pull isn't going to give the lender the full picture of what they need to give you a true pre-approval. Now, a lot of people ask, is there a minimum credit score needed to obtain a home loan in today's environment? And the answer is there could be. It depends on the home loan that you are applying for. So every home loan program will have a different minimum credit score. Now, keep in mind, the higher the credit score doesn't automatically mean that your home loan is going to be approved, because there are additional factors that go into that home loan pre-approval, such as debt to income ratio, assets, the actual credit profile itself. The score is one thing, but what has happened in one's credit profile is also something else that lenders are looking at. So score is important, but actual reporting history of what's taking place in the credit profile is also important, together with that debt to income ratio, assets, etc. If your focus is building your credit score, be very careful not to close credit accounts. A lot of times people think that that's going to help boost up their credit score, and it actually can decrease the credit score. So here's my advice. If you have an old credit card, maybe it's a department store credit card you opened years ago, you haven't used it, and let's say it hasn't been active for 6 months or more. If you close that account, it's less likely that it's truly going to impact your overall score. But if you close a credit card, let's say you go to a retailer, they offer you one of those, like, oh, you get, 10% off if you open a credit card today. You open it, and then in 90 days, you close it. That could negatively impact your credit score. So it kind of just depends on what your overall appetite is for having lots of open accounts out there. Some people are just really concerned about it because of identity theft, etc., which I totally get. Are you in the process of wanting to buy a house or potentially refinance? Therefore, your credit score is going to be important. Then at this point, I would say don't close any accounts. Let your lender pull your credit report and give you advice. There are analyzers that lenders use that we can actually go into one's credit profile and see what will happen if somebody closes an account. So again, if it's an old account and it's been inactive for a long time, it's less likely that it will impact your credit score. But if it's a newer account or it has had activity over the last 6 months, the likelihood is if you close it, it could potentially drop your credit score. I'm sharing this with you because I believe in home ownership. I talk to so many people that truly do want to buy a home, and they just don't know where to start. And credit is always in the top of their mind. If you're young or you're older, or maybe life has happened to you and your credit's been tarnished, know that there are ways to move through that and build your credit score so you can in fact realize that dream of home ownership. And whatever you do, don't make this big mistake after putting all the hard work in to build your credit. Click here to watch my video on the #1 thing that drops your credit score.